Good morning, traders, and this is your DAX technical analysis for today. If you're new to the channel, this is really just where I do my technical analysis. It does help me to explain it to other people and get my plan ready for the day. And as a result, you're sharing in my trading strategy for the day. So today on the DAX, let's just review yesterday quickly. So we had a structure. We had some structure here which was looking like a continuation to the downside. That did not materialize. Okay, so I think at the moment it's pretty safe to say we have a bit of a trend line forming here, and being the DAX, that trend line is more than likely going to be some kind of a channel. Just delete this. And the DAX loves channels. Okay, so there it is there. That's our channel at the moment. So I think until that channel breaks, that is the structure that's in place. Right. Looking at the oscillators, on the stochastic MACD, we're flat on the zero, nothing much happening there. We are pointing down, the price is rising up. So we've got a bit of diversions there. Difficult to read into this on the daily of what's happening. So I think the best bet is intraday trading right now. And we'll cover that right now. Okay, so let's get the levels in. First level that is of clear importance is this top of range. Okay, remember we've been speaking about this for quite some time now. This is the top of range. And yet again yesterday we gapped up, hit the range, top of the range, and sold off. Now, right now, futures market is up 1%, 1.12%. So we are hovering on 10,871. And if I just put that in, 10,830, 10,860, 10,809. So it's somewhere in this area here. 10,8, let's leave it there, 10,868. Okay, so right now we have a gap up, and I don't really know what to say about that, but we've definitely got a gap up. Asian markets are up because the world is perfect at the moment, and we do have non-farm payrolls at the moment. So non-farm payrolls this afternoon, and the forecast is for 22 million job losses. That's pretty much 13 million more job losses than last month. So that is a fairly dire number. And I mean, 22 million is more than the population of some countries. So at this stage, I'm pretty cautious and staying well away from the market. There were some results that came out last night, which is more than likely what's driving the market. There's some earnings results that came out which were fairly bullish. And that's probably what's driving the market at the moment. It is also low volumes right now, and the UK is on holiday today, so it'll be low volumes through the day as well. So anything can happen, but I'm not entirely sure that I want to be in any trades today awaiting non-farm payrolls. Again, it doesn't really matter what currency trade or what instrument. There is going to be a lot of money flowing around the market, and that can create volatility and can also create confusion, and both things that I don't really want to be trapped in. But nevertheless, let's just move through the structure here. And the first thing for me is, when we're on the hour, this confusion here of moving up and down on the hour. See the moving averages crossing up, crossing down, crossing up. Now that's confusion. It's big up, big down, big up, big down, big confusion. That's pretty much what it is. And until we break through this range and hold it properly, okay, we did get a breakout here, got the range target, but I'd like to see it break and hold it properly before we start trending. And I don't think we're going to trend for some time, to be honest. I think we are going to be sideways for probably the rest of the year. So it's going to be pretty difficult. You're going to have to pay attention to your levels and adhere to them strictly. Okay, so let's just assume, I'll come down to 15 minutes here. So let's just assume that we had this gap up, we had some structure here, which kind of was looking like we're going to come back, we're going to roll over, and then we had this massive bar here. Okay, and this massive bar was a result of the Chinese imports that had increased, and they were quite a bit above what the forecast was. So Chinese exports, not imports. So in other words, Chinese factories are open and they're exporting stock. But my question is, who's going to be buying the stock with the unemployment rates across the countries? I mean, 22 million is just the USA. Every other country around the world is going to have the same. You know, there's been job cuts, there's been salary cuts, there's been businesses that have been closed for months now, who probably will never open. So it's all fine and well, the factories are shipping stuff, but who's going to buy it? Okay, so that's the question we need to ask ourselves at the moment. And what we're seeing at the moment is that Chinese factories are open, they're producing goods, fantastic, world economy is recovering. I'm not of that thought. Okay, so I think we've got the gap up, and right now that gap is fairly significant. Okay, so let's get the value again. 10,870. So that's where we are at the moment. Okay, so I'd like to see some structure. I'm going to be impressed if it gaps up like this and continues running, based on the economics that are in the market right now. But it has happened in the past. There have been countries where the currencies have failed, where the economy has just gone completely, yet the market continues rising. South Africa is an example as well, where things fall apart in South Africa, and the stock market continues rising because it's dollar based. So profits are in dollars, and it's a dollar based. Most of the larger organizations are dollar based, and a lot of the other companies, Venezuela is another one that comes to mind. So anyway, anything can happen. I think that's the point. And what we need to do is just look for the structure. So for me right now, we do have a bit of an inverse head and shoulders here as well. It's also pretty, it's visible on the Dow Jones as well. So here's your shoulder, here's your head, here's your other shoulder, and we've got a breakthrough of it. So this gap up is a break of structure, definitely. We want to see it come back. So if we come back to the hour, you'll see what I mean. There's my structure. Okay, so 10,756 is what we're looking for a break. We get a break above it, which we've got at the moment. I don't want to chase along at the top there. I want to see the pullback onto the structure, and I want to see the structure hold. So I want to see it come back into this area. It's not perfect. You probably have to put two levels in here. So you want to see price come back to the 10,799, 10,763, or even come and close the gap at 10,690. Okay, price comes back into that area. There could be an opportunity for a long, but whatever you do, my advice to you is don't hold a trade over non-farm payrolls unless you have a good couple of 100 points locked in for profit. Non-farm payrolls can be very volatile. We can swing up 400 points and swing down 400 points in a matter of seconds. So be very careful. Okay, so for me, looking at the DAX, I think I'm still going to be watching this. Not going to try get in. I did try get into the Dow yesterday, got taken out of that, and I think Still going to sit on the sidelines on this. I'm not really a fan of trading sideways. It doesn't always work for me. So I'm looking for a trend, and we'll have to wait for the trend. The trend could be starting. The structure could be starting. We have the pullback, moving averages pointing to the upside, and then we just continue moving up. Today, sort of find some structure further up. There could be something up there, but from where we closed, we're already 1.3% up. That would be 3% up. So it can be done. It's been done already this year, but I'm of the opinion that we're going to be going sideways until non-farm payrolls, and then the exact confusion that I'm expressing around jobs numbers and versus factories and versus who's buying and things like that is also going to be come into the market. Okay, but we mustn't be swung by that. We need to trade what we see, and right now what I see is confusion. Okay, so yeah, I think that's pretty much probably doesn't help you for any trades today, but it does give me a little bit of clarity as to I need to sit on the sidelines. I need to wait for structure. We will be watching the 15-minute charts, that's for sure, and we're going to watch what happens at these levels. So 10,799, 10,763, and then at the bottom end of it 10,690. Okay, if we do get some kind of price action off these levels, let's just again highlight the price action that I would be looking for. So this is definitely price action I would look for level. Inside bar, okay, double bottom there. Another bit of structure I'd be looking for, inside bar. Definitely something I would be looking for, a pin bar like that, off a level. Okay, so that's the kind of structure that I'm looking for in price action off a level. It doesn't have to be exactly on the level. This is another pattern which is fairly bullish. Red down, sort of a pin bar in the inside pin bar, let's call it that, and then engulfing afterwards. That's a bullish pattern as well. But you can see indecision bar, engulfing bar, let's trade the upside. But notice when you do get these pictures, when you do get these signals, it doesn't run for the moon. It goes to the next bit of structure, the next level. So you're talking 40, 30 point trades at a time. So that's kind of the plan of action that I would have today. This is a great example of yesterday, how we found structure here all along. So you've got a good 35 point stop loss targeting. You've got one level here, which was 72 points away, blew through that to the next level, which is 100 points. Okay, and that's actually what the norm was of the DAX before all this chaos. Getting a good 100 points out of it was always a good trade. So nothing wrong with that. But at the moment, I think I just want to see a pullback. I want to see some structure come back, find one of these levels, and then we'll move to the upside. Okay. So at this stage, it does look like we are trending to the upside. Definitely trending. This is a pullback, and then we've got a measured move potential as well, based on that, which comes into no man's land. Yeah, I wouldn't pay attention to that. Okay, anyway guys, that's those are my levels for today. That's the plan of action. Probably sit on hands unless we see price come back into this area here and we start seeing something on the 15 minutes which is off a level indicating we're looking for support. Then we look for the break of support and we look for a long to the upside. We'll be out of the markets by 2:15 German time or Central European time. So definitely be out of the markets by then. And wait and see what non-farm payrolls holds. Okay, anyway guys, hope that helps you. Catch up with you on Monday. Cheers for now.